All right. Hello, everybody. I'm your boss, Joe Boss, and welcome to another daily plan. Man, we got a busy day ahead of us. We got a few major economic events. Dollar CAD is moving quite a bit here. Aussie's doing really well. Swissy's doing all right. Yen's doing pretty well. New Zealand pound and CAD aren't doing so hot. New Zealand's doing okay against a few. But net dollar is doing pretty well against everything except effectively the yen, Aussie, and the Swissy. Okay. Let's go ahead and check out what's going on then with the Aussie, since it seems to be doing so well. Let's see here. It's doing really well against the euro. So let's check out, I believe, AUD, euro AUD. Yeah. Aussie moved 50 pips against the euro today because we got euro inflation data out a bit earlier, and the inflation data came in actually a bit softer than expected, and so that increased probability of rate cuts. And now there's more commentary. I believe there was commentary over the weekend from Goldman Sachs and a few other institutions. Let's go ahead and switch the music over to background mode. Yeah, a rate cut for the ECB in April just went up because of these inflation print numbers here coming in a bit softer from the euro area. If we go back to that heat map and look at euro, you can see euro is pretty much down across the board. It's neutral against the pound. It's really bad against euro. So if we go and check out a euro yen, yeesh. Yep, and it's that time again. Yeah, wow, it's down 100 pips. I wouldn't be surprised if this was the low for the day, honestly, looking at these dots. Yeah, I would not be surprised if that was, in fact, the low. Let's go ahead and see where it might end up closing. Yeesh. Probably want to check out some clotheslines here. It's going to look super messy. Let's see. Somewhere around here, so maybe it ends up flat on the day. Boom, boom. Alrighty. So let's see here. We got 5 minutes left until 3 minutes left until S&P Global Manufacturing comes out. I'm going to turn on the Financial Juice squawk here. So if you hear someone else speaking, that is our friends over at Financial Juice reading off the latest news. I'm going to hang out here looking at the dollar CAD. You can see I set a few expectations for higher moves, and we got those higher moves. Got stopped out on this trade right here on that wick, which wasn't all great. Set a limit to rebuy if we crossed back there, and a limit to buy crossing down to here, and we hit this limit first, so got back in. It's okay to take small losses. Okay. let's go ahead and get a little bit of trading done here. So that's probably the high for the day. It's probably the high for the day right here. Looking at these dots, right? All these green dots right here on this bar say, hey, maybe the top comes in right here. Again, it's going to depend on how this jobs and US data comes out. The Canadian PMI data just came out a little bit earlier right here. And you can see it actually came in worse than the prior number by a little more than a whole point. So the Canadian side of things isn't looking so hot. That's why this one's already moved up and weakened against the US dollar a bit already. So now if the US side of things just maintains or stays above, I don't think it's going to stay above 50. Because this is going to be the set of surveys that probably are impacted the most by tariff information. So I'm not expecting these PMIs to come in great. All right. In a minute, we're getting the PMIs and job openings here for the US. Go ahead and put this on a 30-second so we can see it move real quick. That off so we get normal bar colors. Whoa. We're in growth territory. And now JOLTS. I have the I'm currently refreshing S&P Global's press releases right now. Waiting for them to update their website with the report for the US. All right. And so far, so good. Okay. We got the reports. Go, Chris. So this is the US one here. Yep. That's literally what he read off here on the squawk. Yep, notably in relation to tariffs. Tariffs were the most cited cause of factory input costs rising in March, and at a rate not seen since mid 2022 during the pandemic. Data in the coming months will provide important insights into how inflationary aspects of policies such as tariffs balance out any benefits to U.S. producers. Okay, so the outlook going forward isn't good. Yeah, input price inflation spiked higher, so that's not good. And then this is on Canada, because we just got this one here. Adding to the gloomy picture, and again, a direct consequence of trade tariffs, inflationary pressures have picked up, of input costs rising to a degree not seen since summer of 2022. So the Canadian PMIs and the US PMIs are pretty much in the same boat. Now it's a matter of, is that actually the high for the day, or are we about to see follow through? Let's go ahead and check how the yield spreads reacted here. Not good. These yield spread values were higher before the release that just came out. So honestly, this is a point where I want to kind of wait and see and give this news a bit more time before like making any kind of definitive decision of like, okay, you know, time to fade things, considering we have Tariff Day or Liberation Day coming up tomorrow. And I should point out, we have two things coming out of the White House today. We have a press conference from the press secretary, and we have Trump signing executive orders in a closed press meeting. So maybe at around lunchtime Pacific. So around, it's going to be in about another 6 hours, guys. And in about another 6 hours, we're probably going to be getting some information that impacts. Gotcha. Okay. So, yeah, we just did get the PMIs, the final S&P Global manufacturing PMIs. But now we're getting ISM Manufacturing. And ISM Manufacturing generally is more volatile. It's a smaller sample size for its survey. And this is the one that is likely going to be moving prices quite a bit. And that one is coming up here at what Financial Juice said at the top of the hour here. It's going to be roughly 8 minutes till we get that report. And we're going to see quite a bit of volatility coming in when that prints. Now, generally speaking, higher inflation means the Fed stays on hold for longer. But what we're more interested in is the employment side of things at the moment. Employment and growth, mostly. It seems like inflation isn't going to get particularly crazy unless you're also focusing on how inflation is going to be impacted by these auto tariffs. The price of vehicles and homes are going to make a pretty big difference in inflation over the next couple of months here. So we'll see how that comes down. Those are the kind of, when it comes down to inflation, it's autos and homes. And when it comes down to growth, well, we actually have to see how companies fare through the tariffs and see if they're able to still conduct all their business. But needless to say, when tariffs are implemented, at least the tariffs that are expected, it's not going to be good for growth on the US side of things. So even if inflation is expected to maybe inch higher or stay sticky and employment stays flat or slightly rises, that would put the US dollar in the bottom of the dollar smile, which would allow these other G7 currencies to appreciate against the US dollar. The dollar smile is a really, really simple theory of how to understand US dollar movements, appreciation or depreciation, during different types of economic regimes. So yeah, looks like things we're heading down there for a sec. So it looks like we're holding this 144 spot at the moment here, at least on the dollar CAD. Let's go ahead and check out the euro. Man, the spreads on that one are a bit wider here. I mean, not terribly wide, right? Depends on who you ask what is considered wide or not. Just checking a couple of things here. All's good. Okay, let's go ahead and check out the heat map on the dollar side. Aussie seems to be doing well against the dollar at the moment. New Zealand's pretty flat. Looks like the dollar's appreciated most against the euro and the pound. It's losing most against the yen. So let's go ahead and check out the pound real quick. Yeah, that does not look great for the pound. How does it look on the spreads? Well, the spreads are still quite positive. Things have been pretty good so far. Well, I guess we'll have to see how this ISM and JOLTS come out. Oh, we just got some OPEC news. Let's go ahead and check out oil. OPEC Plus is not expected to change its plan to gradually raise oil output from April. Okay, so we're getting hopefully a little bit of stability there. Oil has recovered quite a bit in the last week or so. And gold is still trucking along here. Ooh. Yeah, DXY net holding its current price at the moment. That might change very soon here. Let's go ahead, turn financial juice back on so we can hear our friends. Again, if you hear someone else speaking, that's good old financial juice. Okay. So right now, I'm just waiting for things to develop. We went ahead and already covered the PMIs here. Right? Canadian Manufacturing PMI, S&P Global PMI, so we don't need that anymore. We can go ahead and check out the ranges on the day here. Let's go ahead and check it out for the pound. A lot of lows for the day coming here, but somewhere here in the next hour or so, you can spike quite a bit lower depending on how the data prints. And pretty much the same look here on the euro. So we're gonna have to, yeah. Oh. Here we go. We got about 20 seconds left before the thing releases. Then we'll be able to check out how assets are reacting, including the S&P. And the NASDAQ, of course. Oh. Not great for growth. Okay. I would have expected a much weaker US dollar reaction off this, because this would imply some slightly lower growth on the US side of things. And the employment index side would lead to a tick higher going forward in unemployment. So I would expect US dollar to fall a bit from here. But on the reaction to the news, it's pretty much flat. Let's go ahead and check this out. Yeah. those yield spreads are not looking good. And how about yield spreads over here? These look to be improving here on the euro side of things. Yeah, just looking at the yields and then the growth outlook expectations, I'd expect the dollar to be weakening from here. But who knows? It might have something to do with Tariff Day, Liberation Day tomorrow. Heyo, Flo. Nice to see you. Yeah, if you guys are in the chat, let me know. Yeah, I would have expected a much more negative reaction on the US dollar. Yeah, kind of like this. Yeah, so Euro did particularly well. New Zealand's doing good. Aussie's doing good. Pound is doing good. All these other currencies are seeing relief. The Canadian dollar isn't seeing the same kind of relief. So maybe it has to do with the expected slowdown in growth due to the tariffs between the United States and Canada. But net, it looks pretty positive here for a weaker US dollar. Probably for the rest of the week until the tariffs get implemented. And we've already had a bunch of forecasts from the central banks of these other countries effectively saying, hey, if these tariffs, these 25% tariffs on some of these goods get implemented, we could see our growth hit in our country. I know that the Japanese have been trying to talk with Trump about getting exceptions, especially for their auto exports, their car exports. And Ishiba actually just said, I think in the last 24 hours or so, that he's willing to go back to the United States in person to meet with Trump on figuring out some kind of deal to get an exemption for Japan. Yeah, so things are not looking terribly hot. I mean, yeah, this is a nice little bounce. But it's 8 pips. So it seems like things have been tempered. The reaction has been tempered because more or less people are probably more. Yeah. It's been pairing gains a bit here, but nothing terribly serious. The tariff expectations and the hit on the growth of other countries might be mitigating how volatile markets are right now coming out of this report, is my best guess. But overall, just looking at this piece of economic data in isolation, yeah, the dollar should weaken like this. And it did, right? If we go through the charts, all these other assets are rising against the US dollar, and then you can see the S&P and the NASDAQ are falling. So if you want a decent estimate of US growth expectations, look at equities. This is coming down lower. This release hurt growth expectations. That was kind of expected. But when it comes down to the currency side of things, a lot more factors are taken into account than just, okay, is the US economy growing? Is the US economy shrinking? What's inflation doing? What are the companies doing? What about gold? Thanks for the question, Lucky. Let's go ahead and check out gold. Gold probably appreciated. And looking at the green here, it did. Yeah. Gold appreciated. I mean, it looks like actually on the release, it rose, it dumped, and it rebounded. So net, the move is flat. I would assume that this would be good for gold. That would be my expectation. It doesn't seem like outside of equities and pretty much most global equities except from Germany and New Zealand are, yeah, all these are, yeah, now France just went green here. Australia just went green here. Yeah, all these equity indices around the world are red at the moment. And Japan is down 2% on the day. Yeesh. That is pretty, that's looking pretty bad. Compared to the S&P, compared to the NASDAQ. UK growth getting hit a bit more. Euro growth, French, German, Nikkei. New Zealand and Australia. Australia got hit quite a bit here, huh? Yeah, and yeah, pretty flat day on gold. So I was expecting a bit more volatility, but it seems, I'm going to reiterate, it seems like things are pretty dampened on the volatility now in anticipation of what the press secretary is going to be saying here in, call it, hours from now. And in about 5 to 6 hours. Thank you. I'll go ahead and mute him now. But in about 5 to 6 hours, we're going to be getting a closed press meeting where Trump's signing a bunch of executive orders. And we'll probably get some new comments out of Trump about the tariffs. And again, it's usually with the dollar smile theory, when US growth is lower than the growth in the rest of the world, and the rest of the world has a positive growth trend, that's going to usually lead to a weaker US dollar. That's how the bottom of the dollar smile is roughly interpreted, just to simplify. But in this scenario here, even though we have US ISM coming in pretty weak here, it should impact growth expectations to the downside. And it is for the United States. You can see the equity indices are falling. That's hurting growth expectations for the United States. However, if tariffs, these retaliatory, reciprocal, and auto tariffs are put on by Trump tomorrow, and then put into effect on the 3rd, we'll end up with growth in all these other countries also getting negatively hit. All the growth expectations for all these other countries that we need to be doing well for the bottom of the US dollar smile section to be true. Yeah, it's going to be necessarily moving your interpretation of the US dollar to the left side of the smile. Now, the left side of the smile is when growth around the world, or at least expectations of growth, are coming down around the world. And the US is still doing pretty well. So when the rest of the world's growth is slowing and the US's growth is slowing, but at a relative pace, the rest of the world is slowing faster, the US dollar works as a safe haven asset and retains its value or appreciates. Look at that. We should be seeing more of this going forward. And if Trump really wants a weaker US dollar in order to boost manufacturing, well, he did it twice before. When the tariffs were first announced and delayed in February, and then there was another delay on some of the tariffs in March. You could delay the tariffs or reduce the tariffs again, and that would lead to some US dollar weakness. So we'll have to see if the policy actually gets implemented. But the last 2 times I traded those tariff days, it was generally what I did is I just stayed long US dollar going into those events. And then once the notification or the squawk, once some information actually came out saying something along the lines of, hey, Trump did something to adjust the tariffs to make them less significant, less damaging economically, less suppressive or whatever. At that point, okay, take off the dollar longs. That point. It's when the policy changes, when new information comes in, that expectations need to be updated. Right now, we don't have that information. Okay. Sorry, the internet went out there. So let me go ahead. All right, we're back. Not exactly sure what happened there, but had to do a little quick refresh on the internet. And yeah, there we go. We have our US dollar weakness. Our dollar weakness as expected. Do. One sec. Let me go ahead and get the music all set up here. There we go. Yeah. Not so sure what that was all about. Some little tiny technical difficulties. Okay. So far, things are looking bad for the dollar. Oh. Ooh. Now what we want to see is how are the yield spreads holding up? Are we going into super negative territory or not? Let's go ahead, resize Discord, move it on over there. There we go. And yeah, these yield spreads continue to look pretty darn negative. They're not the most negative, but this is pretty directionally bad. Bad for the US dollar. Let's go ahead and check out the euro. And so far, so good. On the short-term side, things are looking good. Intermediate term could be doing better. It's pretty flat so far. But long-term and short-term are doing pretty all right here on the euro. Excuse me. Now it's a matter of, is this thing going to hold? So it looks like we probably got the low end. Yeah, that looks like that's probably the low. So wouldn't be surprised just to see some more sideways-ish movement, at least on the euro side of things. Let's check out the S&P here. Let's see here. Given this high around here, yeah, I wouldn't be surprised if it came in just a hair lower. And we got another wick around here. So this area right around here is probably the low for the day. Man, wouldn't it be weird if we had a rebound? Oop. Let me go ahead and do this. Make sure the internet didn't break my stuff here with the chat. Nope, chat's still good. And there's the Epic Pen. I just wanted to highlight this area right there with all these little dots. Okay. Let's check out the NQ. NQ seems to be holding up a bit better. Yeah, that's probably the low for the day. Look at that. Here's your peak in the distribution, and right there is your low. So that seems like that's probably the low for the day. We'll probably just do some more sideways-ish movement here. We can go ahead and check out gold too, since we already brought that one up. Yeah, I wouldn't be surprised to see some more sideways movement for the rest of the day here on gold. Check out Bitcoin. all the crypto stuff is up on the day. It didn't respond too well to the negative growth hit here. Yeah. But net, Bitcoin is holding up at these prices around 80 to 83K. Holding in there. All right, let's go ahead. Yeah, dollar yen seems to continue weakening. Let's go ahead and check out these spreads. Ooh, that is pretty bearish across the board. I'd expect to see much lower dollar yen if it wasn't for those tariffs coming in tomorrow, frankly. We'll have to see. We'll have to see how the US treats Japan on the tariff side of things. And yeah, that's probably the low for the day here. So given a high somewhere in this box, we can also reduce the size of this box a bit to get slightly more filtered picture. So given a high around here at this peak in the distribution, right? We get a lot of lows following that high around here. That's what we just got. So I'm net expecting sideways movement from here. This is probably going to be a pretty boring day unless we get comments out from Trump later discussing his views after signing executive orders in about 5-ish hours from now, or reaffirmation from the press secretary in about 3 hours from now, talking about what tariffs are expected to be put on. Just another set of confirmation on the tariff policy. Because that tariff policy is expected to impact the growth of these other countries. Let's see here. Trump went ahead and posted some stuff on Truth Social, so I'm just checking it out now. You can actually see it right here in the Discord. I'm in the research forum, and I'm going to, let's close that out, Trump Watch right here. And this is an RSS feed and a user feed where whenever there are live announcements or speeches, anything Trump related goes here into Trump Watch. And so this is just an RSS feed of whatever Trump is posting on Truth Social. And we also have this role here, Trump RSS, where you can go into channel roles. And here at the bottom, optional get pings of Trump's Truth Social posts in the Trump Watch research thread. You'll get assigned to that Trump RSS role. And then whenever Trump makes a post, you'll go ahead and get pinged whenever these posts come out. So then you don't have to be using Truth Social. These do have a larger lag than if you just followed Trump through Truth Social. But generally speaking, that RSS feed kicks out the Truth Social posts quite quickly. And yeah, you can see that's probably the low for the day, given this high. And now if we do make a respective new high, it's probably going to be somewhere just back over here. So net, it's we're probably going to end up closing around 144 here on the CAD. Let's go ahead and check out the euro. Yeah, that that wick got sold, man. These tariff expectations are putting a damper on the US dollar weakness. Check that out. Yeah, probably low for the day is in on the S&P. Yeah, low for the day is in on the NASDAQ, right? There's your peak in the distribution, and there's your low. All set. Let's go ahead and check out about Japan. Yeesh, that is so ugly. Man, that is a far, far move. Yeah. Past around here, when you start seeing distributions and price go past these, you see how small all these percentages are right here. Those are pretty low probability spots. This is all effectively falling knife. Past this little line right there, that's all effectively falling knife. It's, and you can see the volatility increases once you go past that spot right here in the distribution of where lows are most likely to be found for a given day. Yeah, you can see how the odds drop off visually on the histogram and numerically here. So right, yeah, you can even see you're on the histogram, right? Right when you get into this more transparent gray, yeah, it's, you got to be careful. You got to be very, very careful. And I think that box is a bit too tight. Yeah, that looks a bit more appropriate. But you can see how scattered all these dots are. So it's like, hey, given the top for the day is here, where do the lows for the rest of the day come in? And these are all the other prior occurrences. And yeah, man, it can look like a whole bunch of noise. That's why you got to be careful. Once price starts crossing into these tail areas of the distribution, gotta be very careful because you can very clearly see all the noise that shows up. Oh, the low comes in super fast. Oh, the low comes in around the middle of the day or later into the day or at the end of the day. A lot of noise, which is one of the reasons that all this extra variance makes it harder to trade falling knives and to trade these scenarios here. Again, if you're just looking at it statistically, right? If you're just looking at it from the statistical standpoint. If you have an expectation about why the Nikkei would be going down this low, or Japan 225, I believe is Nikkei, right? Then, yeah, sure, right? Trade your expectation. It's your expectation. About Germany. Germany seems to be doing a-okay. Yeah, it's done pretty all right here. Probably need to fit a little more data into this. No. I think things are turning out well there. And so far, nice bit of positive reaction there out of the euro. Nice bit of positive reaction there out of the Aussie. So now we're continuing to get our dollar weakness. About that CAD. CAD's still just holding on there. Still holding on. Nothing terribly crazy here. All right. I think now's a decent place to call it. I'll be hanging out here in Discord in the general and trading rooms here. If you guys want to hang out and trade the press meetings, because we'll probably be getting tariff information there. You always got to be prepared whenever the government has a meeting or says something about very important policy. Got to be there because it'll probably end up moving assets. So I'm going to be there, and I'll see you guys in a bit.